Hello viewers, welcome to my channel. I'm Hasham Ali Khan. Now I'm going to start the next unit in the subject accounting for management. Previous videos I have completed the unit number 3, that is financial statement analysis. In that unit I have covered ratio analysis and common size statement analysis. I have nearly given 15 to 17 videos in that unit number 3. Now I'm going to start unit number 4. The contents of this unit is cash flow statement. The main topic in this unit is cash flow statement. I'm going to explain you the meaning of the term cash flow statement, advantages, limitations, and how to prepare the cash flow statement. Then some theoretical topics are there like tax planning, tax avoidance, tax evasion. Cost concepts are there, classification of cost and cost sheet, preparation of cost sheet. So these are the topics I'm going to cover up in this unit number 4. But the major portion will be on cash flow statement. So watch the video till the end, because without understanding the concept of cash flow statement, you cannot be able to do the problems. The problems are based on understanding of the theory. And apart from that, in examination, you may get a theory question regarding what is cash flow statement, what are the advantages and limitations of cash flow statement, how to prepare the cash flow statement. So until and unless you conceptually it is clear, you cannot go to the problems. So I suggest you watch the video till the end. So before starting the explanation, take the screenshot of the points which I have written on the board. See, this cash flow statement analysis, this is one of the technique of financial statement analysis. There are different financial statement analysis technique like comparative statement, common size statement, trend analysis, ratio analysis, cash flow statement, funds flow statement. All these are the techniques which are used to analyze the financial statements. Now, cash flow statement, it's a statement which shows the inflows and outflows of cash during a period of time. So from where the business has received the cash and where the business has paid the cash, and how much is the cash balance at the end of the period. So the movement of cash will be shown, not only cash but also cash equivalent. Cash equivalent consists of those marketable securities which can easily be converted into cash, right? So first of all, I will explain you the meaning of the term cash flow statement. A cash flow statement explains the inflows and outflows of cash and cash equivalent during a period of time. Remember, we are having cash. Cash means hard cash. That means the cash which we use to make the payment. The cash which is received, that is the cash. But cash equivalent are those assets which can easily be converted into cash without any lapse of time, without any risk. So those are called cash equivalent. So this cash flow statement shows the inflow and outflow of cash and cash equivalent during a period of time. This is the meaning. Now, a cash flow statement plays an essential role in financial management. Particularly, the financial management is a subject which is concerned with finance, how to manage the funds. So this cash flow statement will be very much helpful in finance management and is used to identify all the factors that led to changes in the cash position of the business enterprise. So this cash flow statement will show what are the different factors which leads to the changes of cash position in the business organization. Now, a cash flow statement depicts the changes in cash position of an organization from one period to another period. From last year to current year, or from beginning of the year to end of the year, what are the changes of cash that took place? From where the business has received the cash and where the business has paid the cash. Inflow of cash, outflow of cash. So this cash flow statement depicts or shows the movement of cash during a period of time. It explains how much cash balance we had and how much cash came into the business and how much cash went out of the business and how much cash is remaining at the end. So what this cash flow shows? The cash flow statement shows how much was the cash balance at the beginning of the period, how much cash is received during the period, how much cash is paid by the business during the period, and how much cash balance is left or remaining at the end of the year, at the end of the period. So these are the things which are explained by cash flow statement, which are shown by the cash flow statement. So cash receipts are called cash inflows and cash payments are called cash outflows. So here we have cash inflows and cash outflows. If we combine cash inflow and cash outflow, it will be called cash flows. So cash flows consist of cash inflow as well as cash outflow. All cash flows are further classified. So according to the new technique of preparing the cash flow statement, all the cash flows will be categorized into three. Cash flows from operating activity, cash flow from investing activity, cash flow from financing activity. Cash flow includes both cash inflows as well as cash outflows. So we have to show the cash inflow, outflow from operating activity, cash inflow and cash outflow in investing activity, cash inflow and cash outflow in financing activity. So this is the complete explanation about the meaning of the term cash flow statement. Now, importance of cash flow statement, or what are the advantages of cash flow statement. Very frequently it will be asked in examination, what are the advantages? So listen carefully here. Cash flow statement clearly lists out the various sources and applications of cash and cash equivalent. First of all, the main advantage of this cash flow statement is it shows the various sources from which the business has received the cash and various application areas where the business has paid the cash. So what are the sources from them? There is cash inflow and where the cash outflows. Then thus it helps the analyst in ascertaining the cash flow in terms of how much cash is being generated from business operations. So this cash flow statement will explain how much cash is generated from the operations of the business. The business will conduct a number of activities like purchasing the goods, selling the goods, paying the expenses, receiving the income. All these are operating activities. So how much cash is generated from these operating activities? And how much is the cash inflow and outflow on account of purchasing or selling of fixed assets? And how much cash inflow and outflow on account of financing? That means from where the business has procured the funds and where the business has repaid the funds. So all these things will be depicted by the cash flow statement. Secondly, cash flow statement helps in short-term financial planning management. Management can plan to invest surplus cash or make necessary arrangement to meet the deficiency of cash based on cash flow statement. The second advantage of this cash flow statement is management can make financial planning, short-term financial planning. That means the cash should not be idle, the cash should not be in shortage. Both are bad for the business. There should not be shortage of cash, there should not be idle cash, surplus cash. Whatever cash is required, that much only the business should hold the cash. So this cash flow statement will help the management in financial planning, deciding if there is any surplus cash, it should be invested. If there is any shortage of cash, the cash should be borrowed. So for financial planning, this cash flow analysis is very much helpful. Next, for many analysts, cash is king. See here, whenever a decision maker will not rely much on profit, the decision maker will rely more on cash. That's why many analysts says cash is the king. We will give importance to cash rather than profit. There are many instances where a business is earning huge profit. The income statement is showing huge profit, but the company is facing cash shortage, liquidity problems. The business cannot be able to pay the liabilities on time because there is a lot of difference between profit and cash. Sometimes huge profit is there, but the business cannot be able to pay the obligations on time. Liquidity problem may be there. Sometimes the profitability is low, but the business is having sound liquidity position. So nowadays many analysts are giving more importance to cash rather than profit. Now, inflow and outflow of cash through financing and investment activity gives a clear picture of financial position of the organization. See here, the investment activities and financing activities will show the financial position of the business, and all this cash inflow and cash outflow from investing activity and financing activity are depicted by the cash flow statement. So we can judge the financial position of the business by analyzing the cash flow statement. Next one, a study of cash flow clearly brings out the amount of surplus cash that an organization can afford to use for various purposes. So many a times a management can be able to get the information whether surplus cash is there. So instead of holding surplus cash, we can be able to invest it so that we can be able to get some return. Remember, idle cash will not generate any income, but idle cash will incur cost. The profitability will come down if we keep idle cash. So idle cash should not be kept. The purpose of cash flow statement is to look that idle cash should not be there, surplus cash should not be there. A comparison of cash flows at different organizations clearly brings out the operating performance of different organizations. When we compare the cash flow statement of different organizations, we can be able to evaluate the performance of different organizations, how different organizations are tackling the problem of cash flows. Next one is capital budgeting decisions are dependent on how much cash flows is getting generated at various points of time. Capital budgeting decision is a decision to purchase or not fixed assets like machinery or building or furniture, whether the business should invest in a capital asset or not. That is called capital budgeting decision. So at the time of taking capital budgeting decision, this cash flow statement are very much helpful, because by studying this cash flow statement we can be able to know how cash is generated, whether we can be able to make the commitment of payments for capital budgeting decisions. Next one is cash flow statement provides valuable inputs on financing activity and significantly influence the extent of debt that can be raised by an organization. Thus, capital structure related decisions are facilitated by cash flow statement. Financing decision means the decision to raise the funds. Nowadays, a business can raise the funds through different sources. Like the funds can be raised by issuing equity shares. The funds can be raised by issuing preference shares or debentures or bank loan or public deposits. So many options are available to procure, to raise the funds. That is called financing. So by making this cash flow statement, we can be able to analyze the financing decisions. That means the capital structure. How much is the owner's fund? How much is the borrowed fund? How much owner's fund raised? How much borrowed fund raised? All this information we can get by a study of cash flow statement. Now, Cash flow statement is used by management to arrive at a decision in many important aspects, such as extent of dividend to be declared. Actually, dividend will be declared depending on the profits. Sometimes a business is having huge profit. On the basis of profit only, the dividend decision cannot be taken. Because when we take the decision on the basis of profit, the dividend payment involves cash. Sometimes a business is showing a huge profit in income statement, but the business is facing cash crunch, cash shortage problem. In that case, if the business declare more dividend, then there will be a working capital problem, cash deficiency problem. So management must consider this cash flow statement and cash flows before taking dividend decision. In this way, many decisions are there which requires cash. So management must consider this cash flow position and then take the decisions. Last one, projected cash flow statement helps the management in preparing cash budget. Cash budget is a plan for financing activity. So for making cash budget, the management will take into account the cash flow statements. So cash flow statement will help the management in making cash budget. Cash flow statement points out extent of excess or shortfall of cash at various point of time. So for making this cash budget, this cash flow statement will show at different point of time how much would be the excess cash or how much would be the cash shortage. So these are the advantages of cash flow statement. Now the last topic in this video is limitations of cash flow statement. We should not think that only we have advantages. This cash flow statement also suffer from some limitations, drawbacks. First one, cash flow statement is prepared on cash basis of accounting, which makes the firm to neglect the accrual basis of accounting. There are two systems of accounting, cash system of accounting and accrual system of accounting. In cash system of accounting, we record on the basis of cash received and cash paid. Any outstanding or paid in advance, received in advance will not be adjusted. But in accrual system of accounting, we consider all income and expenditure of the current year, whether paid or not, whether received or not. So normally accounting will be done on the basis of accrual system, and that is the correct system of accounting. But cash flow statement is based on cash system of accounting. We will not consider any outstanding or prepaid. We ignore the accrual system. That is the drawback. Because comparatively, accrual system is superior to cash system. Second one, as working capital is a wider concept of fund than cash, so funds flow statement presents a complete financial picture of the firm, which is not possible through cash flow statement. See here, cash is only a part of current asset. Working capital consider all the items of current assets. Because cash is only a part, it will not show the complete picture of short-term liquidity. If you want to analyze the short-term liquidity, you have to analyze all the current assets. That means fund. Fund means working capital. So funds flow statement gives a more clearer picture rather than cash flow statement. Next one is cash flow statement is not a replacement of income statement. It is referred to as complementary statement to income statement. We should not say that cash flow statement is a substitute of income statement. But cash flow statement is only complementary to income statement. Ultimately, first of all, we make the income statement to find out the profit. And we make the cash flow statement to find out the cash position. So they are not competitive. They are supplementary to each other. That's why a business organization will make income statement, will make cash flow statement. Both are required for different purposes. A comparative study of cash flow statement may sometimes give false results. Sometimes when we make comparison of cash flow statement, it may lead to false conclusions. Because different organizations will have different nature of business. The activities are completely different. So it is not correct to compare the cash flow statement of different organizations. Last one, a cash flow statement is not appropriate in determining the profitability of a firm because all the non-cash items are not included while evaluating cash flow obtained from operating activities. See, the cash flow statement will not show the profit. Whatever income from operating activities or cash flow from operating activities, that is not the profit. That is not the profit. Cash flow from operating activity is simply the cash inflows and cash outflow of operating activity without considering the non-cash items like depreciation, writing off of goodwill, so provision for taxation. These are the items which are excluded while calculating cash flow from operating activity. So we should not think that cash flow from operating activity is profit. Profit is different and cash flow from operating activity is different. So in this video, I have explained you about the meaning of the term cash flow statement, what are the advantages and what are the disadvantages of limitations of cash flow statement. In the next video, I'll explain you about the format of making the cash flow statement. After that, we'll start the problems on cash flow statement. So if you are satisfied with my lecture, give a like to the video, share my channel among your groups, give your comments, subscribe my channel if you have not yet subscribed. And lastly, super thanks option is also available. Buy the super thanks and support this channel. Inshallah, we'll continue the next topic in the next video.